Hello everyone, and in this video we'll be looking at accounting paper 2 that was written in June 2023. So what we'll be doing today is question 2, inventory valuation, 35 marks in 30 minutes. Getting straight into the question, it reads, Mandy Jones is the owner of TVCT that sells TV sets and has 2 branches, shops in KZN. The periodic stock system is used. No missing items were recorded for the financial year 28 February 2023. So what I'm picking up there is that we are using the periodic stock system and our financial year end is 28 February 2023. Okay, so 2.1, we are looking at the Howick branch, which says this branch sells Arctic TV sets. We are calculating the value of the closing stock of the Arctic TV sets on 28 February 2023 using the FIFO or FIFO, whatever you say. So using the FIFO first in, first out method, we'll just look at that in a short while. So the opening stock is 280 units. We have purchased 1,600 units throughout the year. And we had returns of 60, which means we have returned 60 units back to our supplier. And then we have the closing stock of 270 units. And lastly, we had sales of 1,550. And then we have the cost per unit that corresponds to each and every purchase that we have made. And then we have total amounts there. Okay, so straight into our answer book. We are supposed to calculate the value of closing stock of the Arctic TV sets using the FIFO method on 28 February 2023. So as I said, we have opening stock here of 280 and then we have closing stock of 270. Okay, so how do we go about this calculation? We want the value of our closing stock, right? So we had opening stock of 280 and here we have sold 1,550, right? So using the FIFO method, here we're going to start with our returns and see when we did the returns. So we have 60 units returned and the cost price per unit is 4,100. That simply means we had returns in Jan because we have a corresponding cost price per unit there. So that simply means again we have 240 here because that would be 300 minus 60, which is 240 units left in Jan. Okay, so now looking at our closing stock, it says we have 270. So because it's first in first out, that means we would have sold everything throughout the year, but we only have 270 left. That means we would have the 240 left, and the difference of 270 and 240 from this batch, which was bought in September 2022, and the difference between 270 and 240 is only 30. So that means we had 30 that was taken in the September batch, which is 30 times 4,000 plus the 240 that was bought in Jan. So this is stock that's not sold. Okay, so that's 4,100, right? So that's our calculation there. So it's 30 times 4,000 plus 240 times 4,100. So let's just quickly see what that gives into our calculator. Times 4,100, which gives 1,104,000. Right. Okay, then we move on quickly. It says calculate the stock holding period in days of the Arctic TV sets using the closing stock figure. So the closing stock figure, this is what we have. Okay, so if you don't know your formulae, just quickly pause this video and go watch the video where I was explaining how to memorize all the formulae that we have in accounting. So here I'm just going to quickly go through this one. So we are calculating the stock holding period. We're just gonna say 104 over our cost of sales times 365 there. Don't forget, because they said in days, right? So we have 365, and then our cost of sales there, it is, okay, I'm looking at the wrong information. So our cost of sales, we're given 6,010,000. So it's 6,010,000. Okay, so let's see what our stock holding period is. All over 6,010,000 multiplied by 365, and that gives just 67.05, which is approximately 67 days. So that's 67 days. So if you were confused in this formula, this is average closing average stock, but here they said we should use the closing stock, so it's not really an average. We're just using the closing stock figure over our cost of sales. Okay, if you're confused, and then these are just days because we have 365 days, right? And then 2.2.1, I think we need to go back to our information quickly. So it says that Devon branch, this branch sells Pacific and Caspian smart TV sets. Mandy was concerned about the following issues. The Caspian smart TV sets would be too expensive for her customers. High stock levels in all her products might negatively affect the business. So she has high stock levels. Okay, we are noting that she has high stock levels. And then now Mandy expected to sell 1,000. She expected to sell 1,000 Pacific TV sets in the 2023 financial year. Now she therefore adjusted the selling price of the Pacific TV sets in September and asked the bookkeeper to provide an analysis of the quarterly sales. Okay, so 2.2.1 requires us to calculate the value of the closing stock of the Pacific TV sets on 28 February 2023 using the specific identification method. Specific identification. Okay, so our information A, we have Devon branch stock records. We're supposed to calculate the closing stock for the Pacific smart TV sets. Okay, so the cost price is 9,300 per unit, I guess. Okay, so we have units on stock 350, or stock on hand when we started the year on 1 March 2022. I'm talking about this amount, which is 350. We had purchases of 800 and we sold 765. Okay, so closing stock there, let's just quickly calculate. We had purchased, it's okay, let me see one more time, 350. So it's 350 plus 800 minus 765. Okay, so it's 350 plus, 800 minus 765. So let's just see how many units we have at the end. So that's 350 plus 800 minus 765, which is 385 units. Now each unit costs 9,300, so we are just gonna say 385 multiplied by 9,300, and that will give 3,580,500. So that's 3,580,500. Right. And then 2.2.2, it says calculate the gross profit on the Caspian smart TV set on 28 February 2023. So we are supposed to calculate the gross profit. So here we have made sales of 10 million. 934,400. So this is what we have sold, and then we have purchased 800 units worth 8,160,000. Okay, so here we are given the markup on cost. Okay, but on the Pacific it said fluctuating, with me, which means it just moves up and down, because they did say that Mandy has been changing the prices, so she adjusted the selling price, so that's why the markup on cost is just fluctuating, because the selling price is not the same. Okay, so here we have a cost price of 10,200, and we have a markup on cost of 60%. So here we're just going to use our formula, what we want over what we know, and we just get our cost of sales, or we just want the gross profit. So you can just get what you want either way. So there are multiple ways in which you can do this one. So what you can do first is just take your sales, so you can say sales just 10,934. Let's see, it's 934,400. 10,934,400, and then you calculate your cost of sales. So cost of sales, we have sold 670 units, and then it's the cost price of 10,200. So it's 670 times 10,200. So these are cost of sales. That's the cost of sales. That's 10,934,400 minus 670 times 10,200. Remember, here we're calculating the cost of sales, or we're calculating the gross profit per se. So we're calculating the gross profit, and then our gross profit is 4,100,400. Okay, maybe some of you could have worked it out in a different way, but just let me know in the comments of on how you worked it out. Okay, and then 2.2.3, what does it say? It says comment on the quarterly sales of the Pacific TV sets and explain whether or not Mandy's adjustment of the selling price was a wise decision, code figures or calculations. So here we are working with our analytical skills. We are first looking at the Pacific. So the number of units sold here, so these are quarterly sales. The bookkeeper provided Mandy with the following analysis of quarterly sales and stock holding periods. So if you could look from March to May, June to August, September to November, December to Feb. So our sales here, they are gradually decreasing. Yes, they are decreasing, because if you could look here, we have 250, 245, 160, 110. So these are just gradually decreasing. Okay, and this is where she asked the bookkeeper to decrease the selling price, which means the selling price decreased from 13,500 to 10,300, and then she decreased it again to 9,800. So what I'm picking up here is that when she saw that the sales are not increasing, there's just been a decline in sales, she continued to decrease the price. Okay, and also if you are decreasing the price and the number of units that you're selling are also decreasing, then that means the total sales are also decreasing. Okay, and then what I'm picking up also is that we have a huge number of days. This is approximately 6 months of holding the stock. This is a stock holding period, whereas on the other side we started selling the Caspian Smart TV on September, and then we only holding it for 71 days. That's probably 2 months and 10 days, and we are having so much sales, which means these smart TV sets are in high demand because they're selling much more than the Pacific smart TV sets. Okay, so I think we've gathered everything that we need for the comments, and now it's just on quoting the figures and mentioning what we see from these sales. Okay, so now we are commenting on the quarterly sales of the Pacific TV sets and explain whether or not Mandy's adjustment of the selling price was a wise decision. So Mandy's decision, I'm just gonna write everything in short, please. I beg your pardon. Mandy's decision wasn't. No, that's not right. Wasn't a wise one. Okay. My language is a bit informal, but when you're answering your questions, just try to be a bit formal. So now we'll just say for the following reasons. Okay, so now you state your reasons and you quote figures. So number one, units sold per quarter dropped from, okay, so for the first time they dropped from 250, 245, 160, then 110. From 250 to 245, then 160, and lastly 110. Okay, so you can also mention the differences between the quarters. Just make sure that your answer will suffice 4 marks. And then what you can also say is that the sales, because we were talking about the units, you can also talk about the total sales, that total sales have decreased. Total sales, number 2, total sales have declined in each quarter. Okay, now we could also check on the closing stock. Okay, so our closing stock, we did say that we had 385. Where did we calculate? Here, this is our closing stock, but we opened with 350. That means we're not really selling much. Okay, then 2.2.4, it says comment on the stock holding periods of the Pacific and Caspian TV sets. So we're looking at the stock holding periods. As I said, we have close to 6 months here of holding stock. That means the stock is not in demand. Money is tied up in stock. It could result in cash flow problems. So there's really a lot going on here with this what's this, the Pacific smart TV sets. Okay, so I'll just say P for Pacific. Okay, let me just say Pacific TV sets stock holding period. Okay, let's just shorten this out. Stock holding period is 184 days, so which is 6 months. Money is tied up on stock. The stock is not generating any cash. You could also say that. And then we're looking at the Caspian. So 71 days is reasonable. Remember that they also started selling these TV sets, the Caspian, in September, and 71 days is quite reasonable because it's still new in the market, and with the amount of stock that we're selling, it's quite good because it's huge amounts of stock that are being sold. It's actually more than the Pacific, because here we're selling 340, 330. It's greater than any of the quarters for Pacific. So because these sets are new in the market. The stock holding period is probably going to decrease, because also the stock holding period might be a bit high, because these are goods that are not perishable. So these goods can actually last for long. These are durable goods. You can actually go a year without with holding them, but of course the company needs to have some cash flow, so 2 months is quite reasonable. Okay, so now explain how the different holding periods affect the business financially. Quote figures or calculations. So here we'll just look at Pacific first. So Pacific, as we said, money is tied up on stock. So we would say cash flow problems for the business. So ensuring these would also be a cost, because we need to insure our stock. And also, when we keep on insuring stock that we're not selling, so the insurance costs will definitely increase, because if we're selling the stuff, we won't have the need to insure it, because it will no longer be in our possession anymore. So it's cash flow problems, increase in insurance costs, and also where we have to store. So just also have to say storage costs. And now we should just look also on Caspian. So the Caspian brand, as we said, it is quite good. I don't think it will cause any problems. So let's say just Caspian here. Increase in cash flow. So puts less pressure on liquidity, because cash is not tied up on stock now. And also our investment in the stock, because we used cash to invest in the stock, of course, so we'll be able to make that cash in a short space of time. Okay, so now explain what these periods indicate about the preferences of the customers. Quote figures or calculations. So we could say that the Pacific TV sets, it's old brands. So these are old. Remember that they told us Caspian smart TV sets. So those are smart TVs. The Pacific are not really smart TVs. It's those old ones, and people are not really looking into that. People are always looking for an improvement in technology. So hence the change in trend. So it's an old brand. People are, no, let's just rather say consumers or customers. So customers are looking for improved technology. Customers are also willing to spend more on new technology. So I can't just fit everything else in this little box, but for exam purposes you should. So I'm just gonna give you what else you could say in that answer. So here, if you could see, we have made 340 and 330 units of sales. So that means even if you decrease the price for these old TV sets, people are still not going to buy them, because you decrease the price, the number of units that you're selling also decrease, but people are still not buying. So that really shows where your customers are really based, and what they prefer, so that you could also add that you have decreased prices but the units are still decreasing. You could also mention your gross profit, because sales, gross profit, those go hand in hand. Okay, and that's just about that question. And then 2.2.5, which is unfortunately the last question. So it says provide 2 points of advice to Mandy on how she can rectify the high stock levels of some of her products without reducing prices offered to customers any further. So this question says we're just providing 2 points of advice to Mandy on how she can rectify the high stock levels of some of her products without reducing prices offered to customers any further. So here, what she could do, first thing that comes to mind is that she could just give discounts instead of just deduct of reducing the price. So I you could say offer discounts when, let's say, people are buying in bulk, but it's quite unusual for people to buy TVs in bulk, but I guess you could say offer discounts when customers buy in bulk. Okay, that could be a point. She could also extend her target market by advertising. So advertise her products. So they said two, but I'm just gonna give a little bit of some more answers, so that when you're working on some other questions you can think of these answers too. So because TVs could be offered in installments, she could offer to sell them in and require clients, or what's this, customers, to pay in installments. So she could lower offer lower lower installments or repayments when selling on credit, although they didn't say anything about credit when selling on credit, so we're just assuming she does sell on credit. And lastly, she could just also donate to decrease her tax. So donate some stock for tax purposes. Okay, and so that's it with the question. Thank you so much for joining me today. If there's something you didn't understand, feel free to drop a comment, or just rewind the video and rewatch again what I've been saying. Just don't forget to like, subscribe, and of course share to any other person who requires help in accounting. And yet again, we will meet in another video. We'll just see what we work on in the next video. Don't forget to drop a comment on what you need help with. Thank you so much for watching. Cheers.